Hi everyone, welcome to One Finance, and in this video we're going to cover investment asset classes. Investment assets are usually divided into four: money market, bonds, equities, and alternative assets, and they are arranged in what we call the risk-return trade-off. For example, money market, they have low risk, so that's why they also have lower returns. But if you move to higher asset classes, for example, bonds, equities, or alternative assets, they expose you to higher risks, but they tend to give you higher potential returns as well. Now, what are money market investments? These are investments that are classified as low risks, low returns for conservative investors and with recommended horizon of 1 year. For example, here we have four money market investments. Black one from ALFM, the yellow is from BPI, the blue one is from BDO, and the red one is from PNB. So makikita nyo sa lines na wala masyadong curves and the direction is very obvious that is going uptrend. And you're looking at a 1 year time frame. So this is actually the picture of how the funds are very defensive in taking in profits. And for example, their average returns for a year, let's say, would range from 2 to 3%. How about bonds? Bonds are with medium risks, with medium returns for moderate investors, and recommended horizon is actually 3 years. Now, for example, we have here 4 bond investments. Black from ALFM, the yellow is from BDO, the blue is actually from Metro Bank, and the red one is from BPI. So pag kinumpare mo yung lines nila, unlike sa money market, this time makikita mo very obvious na yung curves, and you have here up and then downward direction and then another rebound here. So yung volatilities are very obvious, and although they have the uptrend movement in a 1 year time frame, but because of that risks, if you're going to look at their average performance or returns for, let's say, a year, it's around, let's say, 5 to 8%. How about stocks or equities? Their main features are high risks, high potential returns for aggressive investors with recommended horizon of 5 years. So for example, we have here 5 equity investments, or 4 rather. So makikita mo merong black from BPI, the yellow is from Atram, the blue one is from UCPB, and the red one is actually from PNB. So makikita mo dito ang volatilities is actually very obvious. We have here erratic movements, downtrend, uptrend, downtrend, uptrend, downtrend, and if you're going to look at this massive downtrend here because of COVID-19. And because of that risk, if you're going to look at their returns, now even for 5 years, they all have negative returns that's below zero. But you can interpret this one because of their erratic movement. You can exactly interpret this one as a plus negative performance. For example, for a span of 5 years, you can say this is actually plus negative 70% or plus negative 32%, plus negative 7%, or plus negative 20%. How about alternative assets? So they are known as having higher risks, high returns, extra aggressive investors with recommended horizon of above 5 years. Now, why is that? It's simply because these assets are not readily tradable and they don't have active buyers from the market or from the secondary market. So for example, real properties, rare stamps or coins, collectibles, and precious metals. So if kailangan mong i-liquidate yung investment investments small, you really have to look for buyers, and it takes time. Now, because of that risk, you also are, given higher chances of returns. And if you put the 4 in one risk return, let's say trade-off chart, you will have this money market, low risk, low return, that will give you, let's say, a range of 2-3% per year. Now bonds, medium risk and medium returns, so that will give you around 5-8% per year. For equities, you have higher risks, you have higher returns, and an average return of 10-20% a year. Now for alternative assets, we only assume that, let's say, in a span of, let's say, 1 year, because this is actually extra aggressive assets, you would tend to have higher returns compared to equities or the rest of the asset classes. So that's 20%. That's all for now. Thank you very much for watching.